Hello, everyone, and welcome to the Investing with IBD podcast. It's Justin Nielsen, your host, and it's February 1st, 2023. And joining me, as always, is Arusha Paris. He's a portfolio manager over at O'Neill Global Advisors. How are you doing, Arusha?
I'm doing well, Justin. Another exciting day in the market, a really exciting day after the Fed news.
Yeah, exactly. It was everything was calm, and then everything changed around a few times within minutes. But we'll definitely get into that a little bit today. But helping us do that is one of our favorites. She's coming back to us on the podcast. She's also a frequent guest on IBD Live. It's Anne-Marie Ban. She's the author of the Trading Book. Anne-Marie, how are you doing?
I'm doing well.
How did this market treat you with the Fed meeting and that really big move in the market? Things work out okay for you?
Shock and awe.
So we'll certainly get into a little bit of what was going on today and how the markets have fared. And we'll talk a little bit about why patience and discipline are so necessary, even when you've had such a strong move in the markets. And of course, Anne-Marie will share some of the ideas that she's got in terms of some stocks to watch. So let's get right into it. Anne-Marie, of course, we had the Fed with a expected rate hike today of 0.25%. So nothing big surprise there. What was it that you think made the market react so strong? I mean, the Nasdaq Composite was up almost 2%. Basically, everything had turned around, and it wasn't just when he first announced the quarter point. Things just got stronger and stronger as the press conference was wearing on.
So one of the big things was the breach of this 4092 level that was very important. You could look at some monthly candlesticks and notice that across the board, we'd either started or ended there. And once it got up over that edge, we began to see traders covering. And so there's a bit of short covering that began once we breached that level, and it just kept running. Now, something super interesting was two things. Yesterday, about 30 seconds before the close, some flow in the the E-minis, S&Ps,
Yep.
80,000 contracts moved through in 30 seconds right
Wow.
into the close. Now, that's about double the size of any kind of move that happens in the last minute or two. So it was sizable. The second thing that happened today at about 10 minutes after 12, somebody came in with about maybe 200,000 or 300,000 shares of calls.
That was Justin.
That was Justin, yeah. Just some call action that really absolutely spiked the market, and things started to move, and then we began to fade and question. But all of those things finally just caught, and once it got up over that edge, people were either piling in or running for the fire doors because they're so short they have to go flat. So it really was a very technical response to being short. The big thing is, how's it going to hold over the next couple of days in digestion? Because as we know, he essentially said the same things. He gave us some good news about, hey, some things look like they're working, but we're not going to give in. And a lot of folks are thinking, hey, this 25 basis point hike that he's got for March is really some form of a taper.
Yeah.
But it's not a taper. I mean,
Right.
Everybody's just used to these 75-point things that they're moving like that. The next thing is the dollar really cascading down because the ECB has said, hey, listen, we're doing 50 basis point rate hikes. And so now there's that disequilibrium where, the the euro is continuing to climb, and that is pushing the dollar even further down. And when the dollar goes down in this kind of market, we've had such a move up in the dollar. When it moves down, all our international business can take flight again. Even though we are moving to some measure of deglobalization, we're still selling things across the pond, and that's going to give us more pricing power because our dollar is not so strong anymore. It's, it's clear as mud in terms of where things are going to go in the next little bit.
So, Anne-Marie, so getting back to those large purchases in the S&P 500 in the E-mini futures, so what do you think is going on there? Do you think that you're having a large player come in to try to force the shorts' hands, or do they know something, or how often do you see something like that where you have this large buyer making a massive bet?
Well, we've seen it a little bit more often than usual, but it could be that they're forcing a hand. It could be that, see, this is the exact opposite of where a bunch of hedge funds had put out and said, here's what we're going to see. We're going to see the dollar spike. We're going to see the SPX crash. We're going to see bonds XYZ. They were dead flat as wrong can be. And I think that someone saw all that levering and saw all that early put buying, and they said, I'm going to help teach you a lesson.
That's interesting. Yeah.
Right? And so they just tipped the scale.
Yeah.
And of course, once it got up over that level, everybody was like, I got to get out of here. I'm going to get crushed. And that same thing happens in the 0 DTE options.
Yeah.
Where they
and go ahead and let us know what 0 DTE is.
Okay, so 0 DTE,
right?
yes, it's a daily option. It expires on the same day that it comes out. And a lot of times, big industries in investment houses, they sell them for increased alpha. And if everything stays within a range, you're fine and dandy. But if things break out of that range, it becomes a chase. And that is exactly what happened today. A very good sized chase in my mind.
So now you have those 0 days till expiration options for every day, Monday, Tuesday, Wednesday,
For
or is it
SPY,
just
yes, for the SPY.
Wow.
Yeah, and so
that's a relatively newer thing, right?
Yeah. It's been out about eight months, maybe.
Wow. Yeah, so still, pretty new. Yeah.
So it used to be Monday, Wednesday, Friday, and now they've gone to every day, and it's only SPY and Qs. The IWM still has just Monday, Wednesday, Friday. And that's really where everybody piles into the SPY. They don't pile into the SPX as much because there's settlement issues, and they don't, it takes 3 days and then your cash is locked up, as opposed to, if you're trying to run tens of millions of dollars in and out using your daily leverage, SPY is going to be where you go. And that's where all of these guys are. That's where they're all going.
And so you were talking about these shorts that kind of they had their shorts in place. Were these long-term shorts? Because it seems crazy a little bit to be short in the S&P 500 when it was up over 6% for the month of January, a strong start to the year, well off its bottom. The NASDAQ was up 10%. I mean, it was a huge month in January. So what was it about, were these shorts that were just saying, okay, we've come up too far too fast, or they just didn't believe it? Or was this more of a short-term kind of hedging ahead of the Fed just because of the volatility that often surrounds that?
So my suspicion is, from the folks that I hear and watch often enough to get a feel for where they are, a lot of times these very big hands get married to a narrative.
Hmm.
And that narrative is, listen, something's going to break, and it's going to break soon. And so this could be the day that it breaks. And so they're always planning, but being a lot smarter now, trying to hedge those spaces. And so wherever they're positioned now, they go, all right, if it moves up over here, I've just got to get out. And I've got to take my lumps, and I'm going to get out as fast as I can, because the market's going to continue to rally against me. There are hands, if you look in the dome, it's called the depth of market. If you trade and you have the depth of market visible to you, you'll be able to see how far up traders have sell orders sitting, or how far down traders have buy orders sitting. A little bit like level 2, except a more visual in terms of that sort of thing. And you can see that there are folks with some very long-term ideas about what should and shouldn't happen. Some people, they're trading their narrative and they go, okay, I'm wrong, I'm going to get out. A lot of times these minds don't look at what the market is doing. They believe the undercurrent is going to give them enough information that gives them the outcome. And we can see that hurting a lot of folks. I can't remember the guy that went short on Herbalife and lost $1 billion.
Right,
Remember?
right. Yeah.
He's trading his narrative.
Yep.
And a lot of these guys are more interested in being right than making money, because they have enough money to burn.
Right.
So it's about the street cred of being right. And so there's a whole spattering of all of those folks that really are thinking, oh, the market's gone high enough. Oh, the market's got high enough, right? And all the bond market has now begun to price in this soft landing. And the Fed is still looking at unemployment and jobs numbers.
Right.
And there are a lot of things that might be a little bit wrong with how those are getting calculated right now, because so many people are applying for the same job in different states, right? So a lot of things are getting double counted, triple counted. And those are folks that are married to that narrative that are like, hey, you know what? Employment is the most lagging, the most obtuse thing to use, and it's going to lead them the wrong way. And that's what the Fed is looking at. And so they're consistently saying, I know the Fed says they're going to do this, but they're going to be forced to do this, right? And every time everybody's been wrong from that bond perspective.
Yeah, and so it's not only just having a narrative that might go against you. Everything goes, everyone's going to get caught on the wrong side. But a number of these people who have this narrative, and they have a lot of conviction in the narrative, they might double down at this point, right? They're getting run over, and now they're doubling down. Like, hey, it's more opportunities short. Now, sometimes it'll work, but other times they may be out of business if they do too much.
That's exactly right. That's exactly right. And that really rolls right back down to the general trader that sits at their desk and says, I know this is moving up because X, Y, or Z, and they double down. The difference is an investment house is leveraged, 50 to 1 and has $1 billion at their disposal. And we have much more finite numbers that we're working with. So it's, just because you're big money doesn't mean you're smart money all the time.
Right. It doesn't mean you're not emotional, right?
Yeah.
Exactly.
And you're
Exactly.
Not follow,
So you've been mentioning the bond market, and you mentioned the dollar earlier. So maybe it would be worth it to just kind of take a look at 0TNX, which is the 10-year Treasury yield. So a lot of buying in the Treasuries today, and of course, whenever there's buying, that sends the yield lower. So a big drop in the yield today, and an overall, if you look at the weekly chart, we came up so quick, so fast, but certainly more recently it's been quite the downtrend. So what do you think that says about where we're at in the market? This downtrend in the yield, the 10-year yield.
Well, we can certainly see that people are thinking that eventually there's going to be a lift to these yields, right? They've pulled into their main support lines from the chart. You can see them coming into a region where they normally bounce. And so, you know, the bond market has a tendency to be very patient unless they become vigilantes. And if we remember, I don't know how many of us might remember the bond vigilantes.
You might be the only one, Anne Marie.
I know, this is hair color.
Because that was
It's
like
all
in
white.
that was in the 80s, right?
Yeah, absolutely. And so what they did was they forced the central bank into turning coat and changing positions. Today, there's not as much power to do that because it's not as purposeful. It was like George Soros led that entire dovetail in, right? He was the one that they called, that broke the Bank of England.
Right.
And if you want to look it up online, just go George Soros, Bank of England. You'll see it. You'll get a nice big long story. But what he did with a concerted effort of a number of other folks in the bond market, they forced the change to the Bank of England. And that made them a ton of money. And I think some folks think you can do it again in this market, but I'm not so sure. And so when we see something like this, I'm of the mind that we're very close to something that's got to give just a little bit. And I think I'm seeing it in the bond market. I expected the dollar to do some things more than what it did today. Let me take a look at this. My suspicion is that the dollar is in a place where it really should catch some traction. Now, the great thing is that with the dollar being where it's at, you know, the Fed really doesn't want the dollar to explode higher at all. They're very happy to go along their path and have the dollar move down because it's not going to hurt global trade the way that it might. But something's brewing, and it's, you know, after 2 decades, and we've all been in this business a while, right? Since we were younger. And there's a feel, you get this feeling that, you know, that looks okay, but something's cooking. And I have to tell you, I dig through article after article at night. I'm just always looking for something on page 12, section D, under the fold.
Buried a footnote somewhere. Right. Because, you know, once it gets to page 1, it's done.
Yeah,
so I'm always digging through information that's trying to help me discover, and you can feel a disconnect. And so, you know, it's made me say, all right, I have a significant amount of cash on the side. I'm only deploying about 30 to 40% at any time, and I'm quick to take profit. Now, on a day like today, it's got me going, wow, you really missed on that. And I get to be that, I know I talk about it all the time, but I get to be that girl looking in the window at the party that I'm not at. And so, you know, it's one of those things, but I'd rather, you know, this is a tortoise game, right?
Yeah.
Slow and easy, slow and steady. It wins that game of patience. You realize that you need it sometimes too late. And I've been around so long that I go, you know what? It's okay if you missed out on that.
Right.
buffet's going to be open tomorrow. You're going to find something else fun, and you're going to be able to position. And there are a lot of opportunities opening up, especially, if we look at our MarketSmith screeners, or we look at what's happening in terms of all of the stocks that are coming into buy points.
Right.
There's just a lot of opportunity sitting on the IBD site.
So when we come back, we're going to delve into this idea of why patience is so important, and maybe take a look at, how that can be applied in the current market. Stay tuned. We'll be right back. Hey trader, it's the new year. Have you made your trading resolutions? Vantage Point can help you conquer volatility in 2023. Learn to trade with artificial intelligence. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com and learn how to dominate the stock market in 2023. That's www.freestockcoaching.com. Welcome back to the Investing with IBD podcast. It's Justin Nielsen here, along with my weekly guest, Arusha Paris. He is an O'Neill Global Advisors portfolio manager. And our special guest this week is Anne-Marie Baiynd. She is the author of the trading book. One of our favorite guests on IBD Live. She's always giving us these levels and support levels and resistance levels. Plus, I should also add that Anne-Marie, you're now contributing some content for us on the option side. So that's something that if you want to hear more from her, or at least read more from her, you can check that out at investors.com under research and options. But we were talking a lot about the market, and one thing we didn't get to was kind of the levels that you're looking at right now, Anne-Marie, because I really respect those levels that you set up. So for the S&P 500, you mentioned that we got above that December 13th high of 4,100. What's next? What are you looking at next? Are you looking at another level for it to breach above, or a level of support that you'd like to see it hold? And if it doesn't, then we could be in trouble.
Well, you know what? You hit it right on the nail. So the key thing when you're looking at a chart like this, right? What is your very small moving average I see there? What is that?
There's
that one.
There's a
10 month.
You see the big one?
a 10 month, yeah, and a 50.
Okay.
So the quicker one is the 10 month. Yep.
Yeah. So if we look at that 10, we're going to see that it's down to flat, right? In the space that we're looking at. And so what we're also seeing is that we have clear power from underneath because we're making higher lows, right? And if we take a look down at the volume area, you can see that it's similar, but the 2 months that moved up were just a shy bit down versus the downward months, the months that ended red. And so really, when I look at something like this, I think to myself, okay, what are the traders actually thinking about? And what they're thinking about is, okay, am I going to stall out here, or am I going to break out? And so everybody's going to be watching what tomorrow looks like from about 41.35. So we closed at 41.19, pulled back off of the highs. And tomorrow, what the traders are going to be thinking about is, can I hold this, or am I going to give some back? Now, the first thing that I like to do in a space like this is look at that flat moving average and say, what does a flat moving average mean? It means that there are just as many readings under that line as above that line in terms of the price and volume. If you're just looking at a simple moving average, it's just that price. And so when you look at something like that, think to yourself, the probability that I break out and stay out is not as high as the probability I break out and come back in. A flat moving average, if you take a look at every moving average that you see that flattens out, if you fail, like, let's see, let's go back to maybe December. If we look at December a little bit more closely, we can see that right there, as it turns over, it moves up and down through that line, up and down through it before it decides to move in the other direction, right? And so, and I think that might have been, yeah, right there. So we are going to expect that if it breaks out, it pulls back. And if it pulls back and holds a higher low, we've got ourselves upside, and that upside for the next path is probably all the way at 4,300. Now,
Okay.
is that something that we can buy and just hold? Absolutely not, because that 10 has got a downward drift on it. Remember, that 10 is weighing the things that are closest to price action that's just occurred. And the probability of something behaving right near those lines is much higher than it behaving to the 50, right? And so that's a key thing that I look at. So on the upside, 43, but what I expect is a blow off top here that rises and then fades. So if you buy a breakout here, tomorrow it opens up and it looks really great, and you buy that level, think about where you're going to get out, because it seems very likely from a formation perspective that it's going to give you a wick there before it gives you a body.
Okay. So given that, I think you kind of already gave the instruction a little bit here that is this buy and hold? No, not necessarily. And so, like,
Exactly.
maybe we can get into a little bit of how you do handle this. Again, when is it time to be patient with your positions that you do hold, that you are holding, and give them the room to run? Which is not something we've been doing lately because the trends have been so short. And so,
Yes.
it's basically they've been almost non-existent, that by the time you get the strength, it's like done. So
Yeah.
let's contrast that with kind of this flip side of holding on to cash for too long, where if you've got too much cash, then you're not participating. So it's gosh, pick your poison. So how do you make that decision? Where do you apply your patience?
So that's a really great question. And it's not always straightforward. But for me, if I've been in an uptrend and I come to an event and I say, hey, listen, I want to buy X, Y, or Z, right? I'm not going to wait for a breakout because I believe that I'm in a downward trend. And I believe I'm in a downward trend because my tight moving average on the monthly is downward. And if it flattens, it's telling me, hang on, you need to watch support. As long as it holds support, you're fine. So what does that actually mean if we translate it into buying or execution in the market? For me, I wait until it comes into that floor and I go, that's my least risk. I'm buying it there because I've already got the strength. I know what the composite rating is. I know where it is on the industry charts. I know how it looks from flow. And so I say, that looks good, but I'm going to wait for a nasty day for it to come in so that I can buy it there. And let's say you do that, but all of a sudden it takes fire and it completely blasts out. And you're sitting looking at it and it's on the rise. Again, you go back to that 10, that very tight average, and you say, okay, is it moving up? What's my last area of support That's going to be my floor. That's going to be my risk. I'm going to try and get as close to that, and then I'm going to get in. So it's never about, I had a terribly tough time in 2020 because I'm this person that always waits for the pullback.
Right.
Guess what?
And the pullback was not there.
Never came.
Yeah. Or maybe you had one day.
Yeah.
And if you didn't load up that day, then it was
it left me in the dust all the time. I was just pulling my hair out. But this is the kind of mechanic that I really enjoy because it's patience driven. And the patience is if trend is in your favor. If you're short and you continue to make lower highs, trend's in your favor. If you stop doing that or you stop heading lower, then you go, I got to take some profit. And the same thing here for going to the upside. Yeah, it's breaking out, but there's a general weakness, a general fear and greed that swings back and forth so often that we simply have to go, you know what? I know it's probably just 2-3 days away. I'm just going to wait for the next fade, and then I'm going to get involved, which is really what we've done with a number of these option trades that I've been able to participate in. We've just had some good fortune and patience to go, you know what? Let's wait this out just a wee bit. And once it happens, it'll put you in the trade. And really, patience has been a superpower that I've had to develop because I am a very impatient person. I'm so terribly impatient. You can ask any of my kids. They're like, oh gosh, no. Yeah, she's terrible. And it bled into the market. And so I would say things like, I know this is going up. I'm just buying it here. It doesn't matter. I know it might come down, and I'm not really hyper focused on where's my risk. Because listen, if you don't focus on where your risk threshold is, you're going to end up upside down in something that is going to knock you for a loop. It'll make you it'll take your breath.
Right.
Because you will not have expected it.
Yeah. So now, obviously, every strategy, every approach in the market is going to have its strengths and weaknesses. And so,
Yes.
Where is there a kind of area, some kind of signal that tells you that this is not kind of going back to like that 2020, where that wasn't necessarily your environment? Was there a point where it forced you to either change the strategies and maybe switch more towards breakouts versus pullbacks? And if so, if not at that point, have you taken something like that from 2020 just in case the same thing happens?
Definitely. I'll answer the last part first.
Okay.
I definitely did. And here's the simple hack. If you're looking at a daily chart and you've got something like a 10 sitting up there, if it doesn't come back to test it, you're probably sitting in the right direction if that 10 has got slope. What I realized was
10-day moving average.
Yes.
Yes.
If it looks like it would be a great roller coaster to either crest up and then move down or vice versa, get in and just use that 10 as your support zone.
Okay.
Just use it as your support zone. You'll be able to stay long or trim and just continue up until it breaks below. And then, as soon as it goes back up, you buy it again.
Right.
That's excellent if you don't have something that's going like this. If it's got nice, clean slope, whether it's very steep or just slightly steep, you're going to have a wonderful go at it if you just follow that. And that really was 2020. That thing just, I was so annoyed. I can't even tell you. And people were making money hand over fist.
Right.
And I was sitting there going, this isn't ordinary. my glasses on, trying to sound important. Yeah, it was just, it took me until about July to go, listen, you got to change tack.
Yeah.
You got to change tack. Stop, because everything's leaving you into the dust, or you're getting stopped out because you're sitting in the wrong position.
Yeah.
And so
Well, I
that
mean,
really is the, yeah.
yeah. Well, I mean, even like for our strategy, I know Justin can talk about this too. In 2009, even though we had our kind of signals to get in the market, it was just off a little bit. It was going up on lower volume. It just did not seem like the other rallies that were, that happened before 2009. And I think it took a lot of us who were used to the previous pre-2009 type of rallies to adjust, right? But we were forced to adjust and say, you know what, maybe volume isn't always going to come in to the markets anymore. And so you kind of had to adapt to it. I don't know, Justin, if you had any comments on that.
Well, and you also had kind of that disconnect to a degree where the indexes were doing one thing, but growth stocks were doing another for the first few months.
Exactly.
It was, and we've talked about this before. It was, Bank of America down at $1 and Ford and Citigroup and all of these big, heavyweights that were trading in single digits, doing reverse splits so they don't get delisted from the New York Stock Exchange. It was them bouncing, and again, just a few points, but when you're $1 stock, I mean, a few points is that's quite a bit of percentage, So it was a very, very odd market. But now, Anne-Marie, you're kind of talking about the 10-day here. What kind of time frame is this ideal for? I mean, is this for kind of shorter term traders that are doing swing trades, or is this something that people that are kind of going for trades that last a month or two or longer, is the 10-day too short to kind of use that type
That's
of
a very
position
good
size?
question. Here's the answer I would propose. It could be too short of a time frame if you have a stock that has a general variability about it, right? If you look at the ATR, the average true range for a stock, and it has this habit of continually coming in and testing its 14-day or whatever. Every stock has a little bit of a different vibe because of the types of entities that trade it, right? So you look at something like Tesla that's got a massive amount of volatility. If you use a 10 on that, you're out every other day because it's coming in and hitting it or whatever until you get the big move like it's had over the last little bit. So the space is this. What I just heard both of you say is, hey, listen, we just had to adapt. And that is really the mark of excellence that you find for someone that lasts a long time in this industry. You look at something and you go, that's odd. I need to keep my eyes on it, see if it's telling me something else. If it's not telling me something else, then you know what? I'll go back to what I'm thinking. But if I see something developing, I have to change tack. And so if you begin with a 10, just look to the past and go, wow, does that breaks that a lot. Let me put it on a 10 weekly and see if it breaks the 10 weekly a lot. And if it doesn't, then you go, okay, I'm comfortable with that pullback. And if it pulls back like that, I'll know what to do right there. And as long as you listen to the story that the candlesticks are telling you, and I know that sounds silly, but they do. They tell you a story. It's a very immersive storyline that you get from what managers are doing, what pension funds are doing, what anybody's doing in these spaces. And so, speaking of which, something else that might push us a little further north, pension funds are overfunded for the first time in a little bit. And so there's money to deploy there also that could push the market a little bit higher. But again, it's an individual space. For me, I trade the SPY and the futures every day. So as I'm looking at that, I will use raw price to tell me, hey, I'm going to look at the last 3 candles, and I'm going to see, am I looking that are things moving higher, low, higher, high? I'm going to go long on the first pullback into any kind of candlestick formation, because all I'm doing is measuring risk. The more times we engage with the market, the more times we're there to potentially get it wrong. And so you want to find those spaces where you can go in and go, oh, okay, that's it. But we sort of fight that battle with, well, I got to do something. I'm right here. And it's not, it comes back to that, hey, listen, can you take a deep breath and go, I'm going to wait for it to come to me. We've got to be the child in the butterfly garden, as it were, in terms of price action.
Mm-hmm. And to that end, I should mention that some of the content that you've been writing lately for IBD has focused sometimes on the cash secured puts, where you're like, okay, this is the price that I wanted at. Let me just sell a put, and that gives me the opportunity to buy it when it comes down to the price that I want.
Or take the money for selling it because it never comes back.
It never comes there, so you just I'll just pocket that money.
Paid to wait.
Right. Yeah, so again, kind of getting back to that patience idea, there's a lot of different ways to apply that. Now, should you apply some patience with your mechanics? I guess, how long do you wait before kind of deciding, okay, I have to shift? Because I think sometimes a lot of people suffer from kind of their strategy drift, where they're always chasing the strategy that they think is working right now. And, if you don't stick with anything, you can't you're all over the place. You're trying to become a jack of all trades, master of none. So how much patience should you give to the mechanics of your strategy before you say, wait a minute, I need to make an adjustment?
So in another punt, I will say it depends on the strength of strategy.
Yes.
So if you have
one of my favorite answers, by the way, it depends.
If you have a very simple strategy like a 10-30 moving average cross, that, unless you're in markets that are very heavily trending, you're going to have a coin toss in terms of whether it works or it doesn't. If you have something that's based on price and volume, which is what I believe are the 2 strongest things that help give us mechanical flow, it's very simple. I'm looking at 2 things. I'm looking at price and I'm looking at volume. Now, we can have blow off tops in volume, and that means we have to pay attention to follow through, right? And so it really is, I like to give every trade 3 to 4 candles of motion, as long as they are not breaking primary support if I'm long, or primary resistance if I'm short. For a price to break my support level, it's telling me that buyers came in and then couldn't hang on, and sellers pushed them out. So why is that? So I'll go to volume and I'll go, oh, look, volume is really thin here. Let me see what happens tomorrow. If tomorrow it comes in and I have continuation and I break my low, I have to leave. But sometimes you'll get a wick down. If you have a hard stop, it'll shake you out. And the next day, it's back to cool runnings or whatever, right?
Yeah.
So what is it with me and the John Candy movies?
I was going to say, I'm thinking Jamaica and bobsledding now.
Right. So, so the thought process is always try to make it simple, but powerful, right? It's like E equals MC squared.
Yeah.
That's a very simple equation. It's extremely powerful. And you've got to have a master's degree in math to figure out how to derive it.
At least. Yeah.
right?
Yeah.
But the basis of that is A equals B times C or whatever, right? And that's really what we have to do with trading. We can have things that give us ancillary support, relative strength over a long term, break of a moving average, but averages never really give you what individual pinpoints can give you.
Yes.
I'll give
Right.
you a little example. When the Navy was building the cockpit for the, do you guys know this story? For the F-14, they said, all right, let's just go out there and measure every pilot. We're going to measure the width, the span. We're going to measure the length of their arms. We're going to, 50 measurements. And they got an average and they built a cockpit for that average person. Guess what? It didn't fit one man, not one man. And so that was a billion-dollar project for them to go, wait, averages are not what I need to look at when I'm working for precision.
Yeah.
But what they do give me is a range of motion. Hey, listen, we can't really fit a guy bigger than 6'5" in the cockpit. There's no room for him, right? So they fall against those ranges, and we need to use our moving averages in the same way. They give us a flavor of what is, but until you really look at price and go, wait, that wasn't supposed to happen, I need to look at that. So what do? You put an alert about maybe $1 away, average, something like that, whatever percentage you want to go in front of where you think the stop ought to be. When it goes off, get in there and start looking.
Yeah.
And that gives you advance notice. A lot of us trade and we're like, oh, that just happened, I think I need to do this. And that's not a mechanic for good execution. The mechanic for good execution is constantly observe and orient and then say, oh, I need to observe again and orient again. And then maybe I need to decide on a particular flow. The moment we get to the space where we go, I'm going to look proactively at what's happening in my chart, you're going to feel a sense of power that you didn't feel before. Many times we just go in and we go, oh, let's see what it's doing today. Oh, and we don't do any of that deductive or inductive reasoning that says, wait, should it have done that? We normally go in and go, oh man, I had a great day, or oh, that looks terrible, right? But we don't go, wait, why does that look terrible? Sometimes we're so busy making money that we don't even think about, well, what might happen if this thing's done? And that's the next thing, because we wake up and we go, oh man, that was up 20% and now it's up 3% or whatever. And then, but you don't think about it in a relationship manner. You think about it as in, oh, I see what's going on right there.
Yeah. Yeah. And to your point, the early alerts are so important. I mean, you really want to kind of get a sense that your engine is overheating before it catches on fire. So,
Exactly.
Well, you know what, we'll go ahead and take a break right now. And when we come back, we'll take a look at some of the stocks that are on Anne-Marie's radar and maybe how she's applying some patience right now. Stay tuned. We'll be right back. Hey, trader, it's the new year. Have you made your trading resolutions? Vantage Point can help you conquer volatility in 2023. Learn to trade with artificial intelligence. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com and learn how to dominate the stock market in 2023. That's www.freestockcoaching.com. And welcome back to the Investing with IBD podcast. It's Justin Nielsen here, along with Arusha Pires, my weekly special guest. Well, he's very special. He's very special to me. Even though he's on every week, he's an O'Neill Global Advisors portfolio manager, and then we also have Anne-Marie Baiynd that's joining us. She's the author of the trading book, and also a contributor to investors.com for the options content. So let's get into some of the stocks that we can kind of take a look at. And some of these, I mean, a lot of times you do approach them from the options market. So where do you want to start, Anne-Marie?
I think it would be great if we see things that are ready to break out like everyone else is seeing all of these things. So let's start with some of the forming cups, maybe. And, we can look at Tapestry. Why don't we?
The ticker symbol there is TPR. And just as a reminder, we're going to be going through some charts again. Anne-Marie does a great job at kind of setting different levels based on the chart action. So this might get a little chart heavy. We'll try and describe it as much as possible for those listening in, but you can always go see the video either at YouTube or at investors.com/podcast. So go ahead and, again, what we're seeing here is a pretty deep cup. I mean, this is a 44% depth and very long. I mean, we're looking at almost a year at this point. So what... tell me what you're seeing here, Anne-Marie.
So the biggest thing that I look at is what the last bit of rising volume or what the last bit of price rise has associated volume with it. And we can see that the last bit of up pressure volume has been downward, right? So we're seeing overall a little bit less upside pressure than we would normally see in the chart moving up. And on top of that, it's got this level that looks kind of like about 48 to 50. I love your little pale blue line there that says, hey, that's going to be that breakout level. It's the bar that's just at the top there. Yeah.
Yeah. So that's 5% above that resistance level. Mm-hmm.
So that gives us quite the range. Now, let's think about the things that could happen here. People could come in and they could buy and hold. People could come in, they could buy, get into that round $50.30, $50.50, and go, hey, that's a round number. I'm going to cover there. And then it could come back, or it can reject that resistance line right away and come in. We know that if it's building a base like this, and it is a good company that's been building a base like this, that it's probably going to break out eventually. But because it's under this lower volume, I expect that it breaks out and then pulls back and tries to hold higher lows. So what's the play here? As you see it, you might be excited and say, listen, I just want to buy it right here. It's going to go, and it's been basing for so long. I could see something really fantastic. That's true. But in estimating risk, you always want to think about, well, what if I'm wrong? What's my risk? And we were just talking a little bit about the number 4250, where we do see a lot of participants, and we can see that by just a sideways level. If you look closely at where those candlesticks are over the last little bit, you'll see they're basing right around that 4250, right there where that is sitting. And so we have to say, hey, that could be my risk right there on that edge. So is that a risk I want to take? And if I want to take it, how much size do I want? And so these are very important things. My thought is, hey, it's on diminishing volume. Expect that it pops out and then fades. It's testing those higher areas, but when it comes in, that's what you're going to get. So that's what I'd be looking for, somewhere between 45 and 4250 to execute there, and you'll be right there on your risk.
And that could kind of just tack on a handle to this cup, which wouldn't necessarily be a bad thing. Again, once we start getting cups that are 40% deep, that's a little bit excessive for our models. But if you can then kind of almost form another base, as a handle, but it's maybe a cup in its own right or a flat base, then that kind of gives us a little bit more, I guess, conviction in it. But one of the other things that I should note here is, I mean, this is already, if you look at the daily chart, it's already like 18% above its 50-day moving average line, and it just does look like it kind of came straight up there. Is there a level that you ever look at in relation to like the 50-day or the 10-day line that, hey, this is this much above that line, and that's just too much?
So it does give me pause, but it ends up being, let's see, which way is the wind blowing? If I look at it in terms of the moving average, what I will say is, okay, it's breaking out really strongly. What kind of news is there? Some news I need to look at? Is there a catalyst that's forcing this into its next level? And if it isn't, if it's just running with the market, then I'll just continually to draw a line under a new higher low, under a new higher low. I'll look at a congestion mode. That's what helps me, instead of focusing on, wow, which moving average should I pay attention to? Is it closing below it? Is it closing above it? Is it dancing on it? I can just draw the line straight across and go, okay, that's the support. If they lose it, I'm going to drop down to that next level. And that's going to feel uncomfortable if I'm still carrying any kind of size.
Yeah.
Now, could the catalyst be, I mean, they're reporting earnings next week. Maybe it's running into earnings. How do you generally take earnings into account? Do you take it into account when doing your analysis?
I do. I used to trade earnings a lot until I traded a very big position in ISRG. I had very heavyweight options, and it opened up $100 lower. And I literally, my throat, I was like, I can't breathe. So yeah, that did it for me. I don't do them in that size certainly anymore.
Yeah.
And so I do pay attention. I'll go into the option chains and I'll start looking around to see who's positioning. And we talked about this a little bit ago. Somebody's got 1900 put options here. We don't know if they're bought or sold. We'll know tomorrow by the volume size sitting in the open interest. But if we look at that, we go, oh, maybe this person's got a ton of they've got a ton of shares and they're just protecting it at this 42 backstop. Or maybe they say, hey, I want to buy it for at the 42.50, and I just got myself $1 premium, so I really get it 41.50. And so there's all of that I think about. I just look for the big footprints into earnings, and I try to stay in the neighborhood and then just be smaller with my size, because I have, I've just hit myself in the face with a bat. Doing
you didn't have to touch that hot stove. You didn't have to touch that hot stove too many times before you learned your lesson, huh? Well, let's go ahead and shift over to another stock, Rockwell Automation. This is ticker symbol ROK, and this one it's also a pretty long and a pretty deep base, 46% deep. But this one is not. It's not up at those levels yet. Where it was at, above like around 350. So it's not up to those prior resistance levels. So how do you handle something that's kind of, it looks like it's on its way for the right side of a cup, but it hasn't finished yet?
Well, I'll come back to, where's the last place sellers piled in that they just had no chance of getting over. The buyers had no chance of it. And it really does sit right around that, that 300 level, right? And so I will look at that and I'll say, all right, what I expect, see, as this chart was moving up, what I noticed until maybe just the other day, we just saw one upward move that had quite a bit of volume on it, but the very next day, it just didn't follow through as much, but the last couple of days have had a fair bit of volume. So it's got me a little nervous that it might get up over that 300 area. But my thought is always, what's happening at the top of resistance or at the floors of support? And I can see that we're still making higher lows, but those higher highs they get tested, but they can't hold them. So I think there's some consolidation there. And when consolidation starts coming in, that's when I really start putting my alerts. Every afternoon, I'll go, all right, let's see where we pulled in. Did we hold higher over here? Did we see the kind of volume that we want to see? So really at the breakout, if we close a day up over 290, right? We come in and it says, hey, listen, we're going. It's 290 and we've closed above there. It's done so much consolidating that the breakout is going to have a little bit of follow through attached to it, simply because there are going to be people that go, oh my goodness, I'm short, I got to get out. Oh my goodness, this is my breakout period, I got to go long. And everybody is going to just tag along in those particular ways. And so I'll just go, you know what? It's wrong. I'm done. And so that's really what I'm looking for. I'm looking for the close above 290 that tells me, hey, my congestion region, I'm breaking out of it. So any kind of fade is going to push me up into that 300 mark. And that's those round 00 numbers.
Right.
Just they get to be like a magnet for folks trying to get there. And Rockwell has had, good grief, they've had some amazing numbers.
And do you so what's your play here? Do you just wait for that, or do you sell some premium in the meantime while it's in its consolidation?
Well, I did sell some premium. So I sold some I sold an iron condor, which means I didn't think it was going to go up over the 300 area. Actually, I didn't think it'd go up over 290. And I didn't think it would come down below 240. And what I noticed was that someone had sold thousands of these puts in a spread at 250. And I thought, all right, 250 feels a little rich because I think it could pull back, especially if we had any jitters. But they've been right. But I said, hey, listen, I'm going to sell the 240 to 220 or 240 to 230, and then the 270 to 280. And I collected a ton of premium. And that is really keeping us in flat action overall. So that really is, anytime I look at a chart and go, I got to wait, I'm going to sell some premium, because at least that patience, I can say, hey, patience is going to pay me while I wait. And so it gives me a chance to interact with the market, but not so aggressively that I sit underwater, because this thing has been moving quite a bit intraday. I mean, it's having $3, $4, $5 swings sometimes.
How far out are those options for the premium?
March.
Okay.
March. So right now they're relatively insensitive as the price moves up, which is great for us, right? We don't want it to be 4 days before expiration and have this kind of motion. Right. We'd want to get out if that was happening. But because it's early in the game and I'm thinking, hey, listen, we just have got to take a little breath, then we can sit in that space and go, all right, well, I'm going to let the change pay me. And I know that as soon as I cross the line, I get out. And so I've got really limited risk and quite a bit of upside.
And if I recall, you had this, this is one that you shared with readers. And I think if I remember correctly, this did kind of cross that level that you were looking at, but
it never closed. Yes, it never closed.
Because you were giving it that kind of room, it came right back in. If you were looking at 3 candles or what have you, it just it never breached that rule.
Yeah, absolutely. And so I'm still waiting because it's still holding over that 280 area, right? And so the key event is, does it hold over that 280, with volume and doesn't pull back into that close. And so far, it's still sitting in the, I'm not going to fly out of here. But if it closes over 290, we're just going to have to, take our lumps, which should be minimal because it's so far away.
Yeah. Okay. And then, gosh, I don't remember what we were going to choose for our third one. I mean, we were talking about Albemarle, and we were also talking about Dexcom, and I don't know if we made a decision. So you want to do Dexcom?
Yeah, let's do Dexcom.
Okay.
Yeah, that was actually the first position that I shared with the folks in the options space on investors. And I did something that normally makes a number of people a little bit nervous. I sold a call spread at the money. It was about 121 and some change, and I sold the 120s and bought the 125s. And so that gave us a credit. And then I also sold a 100 put because I suspected we would come back into that 100 area. And we really have done that. It's been about, I don't know, maybe 4 weeks. And we have a February expiration on these, and they still look quite lovely. Now, what we should look at here is if it comes into that 100 area and we do get put to it, we have about maybe $5. So it's like $95 that we would actually be getting the stock at. And so that really would be our floor. If it drops below that, we would get out. I'm not quite sure it's going to come back to 100 because what it's been doing is really sort of failing to close lower in the last 4 or 5 days. It hit that bottom, and so now it's holding and it's holding and it's holding. Now I'm waiting for it to breach and then pull back and hold another high. So I think we're going to leave with full credit on this. Unfortunately, I'm not sure it's going to give us the opportunity to engage, but because we're sitting underneath those moving averages, we probably don't want to be super excited about getting engaged right then anyway, because it's telling us that there are still sellers above that maybe have been trapped trying to get out. If it does come in, we can ride it to, and it pops, we could ride that right back into 120. It seems very reasonable that the chart can do that.
Is there ever a point? Is there ever a point where you get maybe like 80% of the premium, and you just close them out early, or things like that?
Yes, absolutely. Normally, because I am really conservative, if I get to 50% of the premium, I will take my profit. Because if you spend time in the option space, you can see profit disappear so fast.
Exactly. Exactly.
What just happened?
Don't count your chickens before they hatch, right?
Exactly. Exactly.
Well, okay, it's not a bad where your worst case scenario at this point is that you're collecting that premium and looking at that.
Yes,
so,
exactly.
Not bad at all. So, and again, folks can go ahead and take a look at some of this content that we're talking about. Certainly, both Dexcom and Rockwell were on our website at investors.com, and you can go to the options section under the research tab. So, it's been really enjoyable for me to take a look at some of those. I edit some of the options content on occasion, and so I've been looking at Anne-Marie's stuff ahead of time and getting the chance to ask her questions along the way. So that's been awesome for me. So I appreciate that opportunity. So, well, hey, Anne-Marie, it was great having you on the show again. I'm sure we'll have you back. I'm sure we'll have you back soon, because it's always a pleasure listening to your real great look at the markets, the levels, the technical action. You just bring so much great analysis to your overall view of things. So I really
thank you for saying that. I appreciate it. I love the market. I love
it shows.
The market.
So very good. Well, thanks again for being here, and thanks to everyone for watching on this episode. Hope that you tune in for us next week, because we're going to have John Najarian. We're going to go ahead and continue the options talk. John Najarian, of course, is a frequent CNBC contributor, and he heads up Market Rebellion along with his brother. So hope you join us for that. And thanks so much for watching us today. Take care, and we'll see you next time. Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.